Since the beginning of this year, the shilling has been on a losing streak, especially against the dollar, due to the weakening foreign currency inflows and a strong dollar globally, driven by the improving American economy. This year alone, the Kenya shilling has lost close to 15% of our value to the dollar. However, this month, the local currency has been gaining ground as the National Treasury sells more government papers. Last week, the average yield on the 91-day Treasury bills rose to 21.3% from 20.6% the previous week. Market analyst Ally Khan Saatchu says the shilling is expected to strengthen, driven by foreign currency inflows targeting government papers.
When you're getting 20% on government bonds, that's a lot of interest, in this sort of circumstance, and I think that will suck in capital from abroad.
However, policy analyst Walter Ongeti says the government should come up with a permanent solution to systemic problems facing the Kenyan currency.
The measures that are there would be short-term, but in terms of long-term measures to have a stronger shilling, we just have to go back to the basics, and the basics are that we must enhance our exports.
Early this month, the central bank said it would continue to intervene in the money market to support the Kenyan currency by selling more government bills and bonds. However, Ongeti fears the high returns on treasury bills is likely to lead to a steep hike on interest rates, which may have more damaging effects to the economy.
When the shilling becomes weaker as it is doing now, what basically happens is that even the foreign debts that we are servicing become more expensive. Even the investments that we are putting in this country, which are relying on imports of raw materials, will become costly. So that if you were to basically construct an SDR line at 400 plus billion shillings, you will find that cost going up because you had budgeted at an exchange rate of 86, 83 shillings a dollar, and now you have to basically import at 113 or 103, which creates that variation, and that is a very, very tricky scenario.
Part of the solution, according to Ongeti, lies in boosting Kenya's export basket and improving the ease of doing business in Kenya to attract more investment into the country. O'Brien Kimene for Business News Hour.